Hello everybody and welcome back to another video. In this video I'll be doing a trade breakdown on two trades I took last week on EURUSD. Now like my last videos, I'll be doing a top down analysis and then on the 1 minute entry. However, the entries are a little bit different this week as they are what I would call a risk entry from a 15-minute POY. Now I'll go into a little bit more detail on this later on in the video. Starting on the weekly time frame, we have our low here to the left that we took out. So we took out our low there and we're now in the pullback phase. So if we were to draw up our current range on the weekly, we would have our high here and this would be our low. And as you can see, we've actually come back into the premium of the range where it's more high probable to look for sales from. And as you see, we have our weekly supply zone here that we've actually tapped into. So now I'm going to go down to the daily to try and refine this this weekly zone. So the refinement on the daily would be here. As you can see, we don't tap into it, so I'm going to move down to the 4 hour, see if we can see anything on the 4. So we have our extreme here, but obviously we don't tap into it there either. And then what else I can see is this. So if you look at this, we have 1, 2, 3, 4. We have 4 candles that are indecision candles, and then we see a strong impulse to the downside. So we have a 4 hour range there. So this gave me a 4 hour POI. I then had 4 hour range of demand here, which we react to and we take out, and we actually take out our swing low there. So we have a 4 hour POI, and then scrolling onto the right hand side, we can see we actually tap into it there. Now looking at the 4 hour structure before we tap into our 4 hour POI, our swing structure would have looked something like this. Now it's quite messy, but maybe we had a high here, a low, we break to the upside. We then print a high here, we then print a low, again we break to the upside, this gives us a high up here, and then instead of continuing in this bullish structure, we then break to the downside, which then meant our 4 hour was bearish. We then print a low down here, we then print a lower high, we then print a low as we take out our previous swing low. And then what happens here is we actually come back up and we just sweep our previous swing high. So this then left us a weak low here. So coming into Thursday morning, my idea was to continue looking for sales until we take out our our 4 hour weak low. Now looking at on the daily, as you can see on the daily is still bullish as our swing structure would be this. So a high, a low, and the high would be up here. So we break the high there, and then we also have a daily demand there. So looking on the daily standpoint, we've actually come into the discount of the daily range. So at any point we could really switch bullish from here if we were going to continue the daily bullish bias. However, I like to use the 4 hour to guide me with my trades mainly. So looking on the 4 hour, my 4 hour is still bearish and we haven't actually tapped into this demand here yet, which would be more likely to look for buys from. But I'm going to delete that for now. So my 4 hour is still bearish. Looking on the 15-minute coming into Thursday morning, I'm going to mark up my 15-minute swing structure. Now again, it's quite messy because of this news, but maybe we had our low here. We then have a high here. I'm going to use these wicks because that's all I've got because of the news. So I would usually not like to use these wicks, but again, that's all I've got. So we have a low, a high. We break the low. We then print our low there. We then print our lower high. We then break down to the downside again. We just wick it here, but I'm going to use that. I'm going to use the full closure here as now price picks up a little bit better. It looks a little bit nicer now. So I will use this low, we pull back, this would be my high, and this would be my low here, or my potential low. Just move it across. So my 4 hour is bearish, and my 15-minute is bearish. And we are working within this high and this low as our range. We've come back into our premium, which is nice. So looking on this bit of price action here, so our 15-minute swing high, and what we can see is, we can see a supply chain begin. like so. So this is a supply chain. I'm going to look on the 5 minute to refine this a little bit. I'll show you a bit more detail. So as you can see, we have a high, we have a low, we break the high, this gives us a demand zone here. So we break to the downside there. If you were to refine this 50-minute zone to the 5 minute, it would be that. As you see, we come back into the 50-minute zone. We break down to the downside, taking out our previous low. We also take out the low to the left. So this is why it's a supply chain. So what we have a supply chain on the extreme of the 50-minute swing. So this is a really high probable zone. In fact, I've gone a bit too far ahead there. Maybe bring that back to there. So this is a really high probable zone, as our 4 hours bearish and our 15 minutes bearish, and this is the extreme of the zone, well, the extreme chain of the zone, sorry, of the range. So a really high probable zone there, and we also have structural liquidity below it. So this here, so this again would be a valid supply zone. As you can see, it flips off some sort of demand here to the right. So, oh, wrong one. So we have demand here, we tap into it, our first tap's there, which comes back up and chains off our supply chain. We tap into it again, and we come back, and we don't actually tap into it, or we don't continue to chain from there. So this was a decent zone, but it was quite likely that it could be used as liquidity. So we had to tap into it over Asia. So then this then leaves us an Asia high that we could potentially use as liquidity as well. So we have this high here and Asia high to use as liquidity below our extreme supply chain. So again, a really high probable zone. So if you were looking to trade 15-minute zones and 15-minute entries, you could have had a entry within this here, covering the high, and look to target this low here. However, what I looked to do was refine this 15-minute zone to a 1-minute zone, basically. So as you can see here, coming back up into our 50-minute supply there, we can see demand on the 1 minute takes control. So we see a very big 1 minute demand chain like so. And then instead of continuing this demand chain, what happened was we come up, we swept our previous high, and I would call this a subtle sweep. So we have a subtle sweep of the previous high, and we come back down and we take out our demand chain. Let's move this down a little bit to clear it up. So you can see our 1 minute demand chain. We sweep the high, we come back down and we take out our demand chain, and we also break down to the downside like so. Now when this played out in real time, I actually had basically an order set on this entry here. So that was 11:43 that occurred on the Wednesday. So I actually had an order here. Once we broke this low here, and once we broke this demand, the 15-minute demand, I had an order on here where I hoped that price come back up and tag me in here on the Wednesday. However, as you can see, price continued to downside and it didn't get tagged. So I then took my order off, probably around about here really, when it was just it was basically just gone. It was never going to come back on that day. So I took the order off at that point, but come back onto Thursday morning. As you can see, we had now come back closer up to this zone, and again, like I said, the 15 minutes bearish. This is my extreme chain on the 15 minute. So I basically put my order back on effectively on this zone here. So I'm going to drag this across. Like so. So this is what I would call a risk entry, as effectively I'm not getting confirmation from this 15-minute zone or the 1 minute entry. It's effectively a risk entry because it's a little bit more riskier, as again I'm not getting confirmation. So I had this entry on here and just put my position on. So about 3 pip stop, and my targets were the 15-minute week low and then the 4-hour week low as well. So effectively we had 2 week lows that I was expecting to get taken out. Well, at the time this wasn't actually a 15-minute week low, but if this 15-minute high was to hold, this would be a 15-minute week low. So the expectation was for both of these to fail, so I was looking to the trade until we took them out. So I have one entry here, and I'm going to play price along. I'll do it on the 1 minute. So play price along. We're now at 8:17 my time. We come back into the zone very aggressively. You can see there's a big impulse to the zone, but I wasn't worried, as I knew this was a high probable zone. And you can see it comes back and it actually melts to the downside just as quickly as it came to the upside. So I'm in here, just there. Let's scroll this across. So I'm in here now. Really, what I like to do, I like to use the low before my entry. So I actually broke even here. Now I could have potentially got taken out break even if price were to come back up and tag back into this 1 minute here. It would have been like a 1 minute chain. It could have tagged me out, but that's how I like to break even. So I break even here at this low. So my risk was off, and my target was the 4 hour low there. So I'm gonna play price along on the 15 minute, and you can see it moves to the downside very nicely. And then stop in here. Let me just go back a little bit. So looking on the 15 minute, now this 15 minute high had held. I then viewed this as a weak low on the 15 minute, and my last point of demand on the 15 minute was this here. So it would have been here, and as you see, the 15 minute last point of demand failed. Just gonna look on the 1 minute here to refine this basically. So as you see, this is our last point of demand on the 15 minute. We come back into it, we then react to it. This is our extreme with the reaction. We then push to the downside, and then this demand zone has failed. And what happened was we came back up, we respected this for a little bit, we then pushed back up, and effectively what we've done is we swept this high. So looking on the 5 minute, we had a liquidity POI that was created on the 5 minute. On the 15 minute, it doesn't look very clean, but this was effectively the zone there if we had it on the 15 minute. So we had a liquidity POI on the 5 minute, and I'm going to use it as that, like so. So it's a liquidity POI because it swept a previous high. It's a lot clearer on the 1 minute and the 5 minute than it is on the 15. So that's what I like to do on some zones. If the 15 minute looks messy, I can move down to the 5 minute or look on the 1 minute to see how it was created. Now looking at this, so this high swept this previous high there. So we had, like I said, a liquidity POI. I then had an order set right here on the extreme. So very similar to this first entry, how it's a sweeper liquidity and it then breaks down to the downside. Again here we saw a sweeper liquidity and a breakdown to the downside. I've just used the extreme on both examples. So I had an order here, and I'll put that on. So maybe about 3.5 pips, something like that. Yeah, something like that. I had an order there. I'm going to play price along. Now it comes back quite aggressively once again, similar to how it did here. But I wasn't worried, as I thought this again was a high probable zone. That's why I used a risk entry rather than looking for confirmation. And then we tap into it, we reject, we come back up, and we almost get taken out for a loss. But eventually we see price play along, and I went break even here. So I went break even there. So again, this is really like the last low before the entry got tagged in, similar to this one here. So I went break even once that low went. And then there was news due at 1:30 my time, so price action wasn't very good for a while. And as you see, this was the news. Now I held it within the news. Now this was a bit more riskier, but what I did, I took a little bit more risk off once we come down here, I believe. So I effectively had half my risk, I think, half my original risk, just in case price blew through this stop loss, which could have meant I got slipped. So I reduced my risk basically, and then I'm still full volume on this one, and again my target was this 4 hour week low. So playing price on. We had a news here, and then it just melts to the downside, and my TP is hit. So just recapping, I've got two 1 minute risk entries within the 15-minute PY. Why the risk entries? Because it's a little bit more riskier to have just an entry within the zone rather than looking for confirmation within the zone. But yeah, that is my two entries, so I hope you can gain some value from that, and I'll see you in the next video.